Hello friends, welcome. In this video, we are going to discuss what is non-audit, how the profit will be calculated in non-audit scenarios. To reduce tax complaints burden on small taxpayers, Income Tax Department introduced a scheme called as Presumptive Taxation Scheme. As per this scheme, you no need to conduct audit for your book of accounts. But there is some eligible criteria. Who are eligible for this presumptive taxation scheme? If you are running a business, as per the section 44 AD, if your business annual aggregate turnover less than 3 crore, you will be eligible for the presumptive taxation scheme. But make sure companies and LLPs not eligible for this scheme. Only individuals and partnership firms will be eligible for this presumptive scheme. Okay. So if you are running a business or a profession, if it is a business, your turnover must be less than 3 crore, and if you are running a profession, as per the section 44 AD, the gross receipts should be less than or equals to 75 lakhs. Again, I confirm, if you are running a business, the business turnover should be less than 3 crore, and if you are running any profession like a lawyer, doctor, then the gross receipts should be less than 75 lakhs. So first we will go for the computation as per the presumptive taxation scheme for the business. So before going to take you to the computation process, let's understand what is the original case. Just imagine this is a original case. So there is a client who is running a business. In the financial year, he purchased total 1 crore and that stock sold at the value of 1 crore and 50 lakhs with addition of 50 lakhs profit. So 1 crore cost price, 1 crore 50 lakhs sale price. So the turnover is less than 3 crore. So he will be eligible for presumptive taxation scheme. And then gross profit, cost price 1 crore, sale price 1 crore 50 lakhs. So the gross profit will be 50 lakhs. Now it is brought down to profit and loss account. In the profit and loss account, again the client have some actual expenses around 25 lakhs. So actual gross profit 50 lakhs minus expenses 25 lakhs. So the net profit was 25 lakhs. Now this client approaching you to file income tax return stating that, sir, my profit is 25 lakhs. Try to reduce my profit. I wanted to pay less taxes to the government. How you will help him? Very simple. As per the presumptive taxation scheme, book of accounts not mandatory. Even if it is already prepared and managed, you no need to consider for computation of profit. What you need to consider? First, you just consider what is the total turnover. The total turnover is 1 crore 50 lakhs. 1.5 crore is the total turnover. Out of the total sales, in that specific financial year, what is the total amount received in bank? Imagine you have collected 80 lakhs and the remaining 75 lakhs, remaining 70 lakhs you have received in the form of cash. Your total sales value, total turnover 1 crore 50 lakhs. Out of you collected 80 lakhs in bank, you collected 70 lakhs in cash. Whatever amount you collected on the bank will be multiplied by 6%. That will be your profit. 6%. And whatever amount you collected in cash, on that 8% will be considered as a profit. So what is the total profit from both sources? Total profit is 10 lakhs 40,000. Your client, as per your client knowledge, client profit is 25 lakhs, but as per the presumptive taxation scheme, the profit will automatically reduce and it is now only 10 lakh 40,000. You know what happens in the outside market? Just to satisfy the client, most of the, not everyone, a few consultants will do that. They will take what is the profit as per the book of accounts? 25 lakhs. So they will prepare a dummy profit and loss account by adding additional expenditure of 14 lakhs 60,000. So whenever you add additional expenditure, the profit will be reduced. So they will just match profit as per the presumptive taxation scheme. Or else your client will ask you, sir, as per book of account, the profit is 25 lakhs. How come you declared only 10 lakh 40,000? So you will not have an answer. So you need to book additional dummy expenditure for the same to reduce the profit as per the, you need to pass some payments voucher. And if you once pass some dummy payment voucher, your profit will be reduced automatically. So you can say that, sir, I have taken risk to reduce your profit from 25 lakhs to 10 lakh 40,000. By saying this, some people are charging some additional fees from the clients. That is also, it's fine. Okay. So I hope it is clear. So when there is a presumptive taxation scheme, you need to first consider what is the total turnover. Out of the total turnover, what is the amount you collected in the form of bank multiplied by 6%. Whatever amount you collected in the form of cash multiplied by 8%, the total profit will be the presumptive taxation scheme. So only the turnover and the profit you need to consider. Okay, book of accounts no need to consider. Just to satisfy the client, you may give him a nominal trading account and profit and loss account to the client. And we'll also discuss the computation for the profession. As per the section 44 AD, if you are running, if you have any income from business or profession, if you have any income from profession, you also can go for presumptive taxation scheme if the gross receipts are less than 75 lakhs. If the gross receipts are less than 75 lakhs. So the total gross fees collected, imagine as a doctor you collected total 40 lakhs. Out of 40 lakhs, minimum profit will be 8%, not unlike 6%, 8%. Here we will be having directly 50%, irrespective of the mode of the receipt. 50% will be the profit, which means out of 40 lakhs, 20 lakhs will be your profit. This is how the way profit will be calculated in presumptive taxation scheme. Let's say again I confirm, this presumptive taxation scheme is not applicable to companies and not applicable to LLP. Companies and LLPs always need to go for audit for their book of accounts. Only the profit as per the audited book of accounts will be considered for income tax filing. Okay. And one more point I would like to add here is, imagine if this business was run by an individual person, on this 10,40,000, individual person will be paying taxes to the government on the basis of the slabs. On the basis of the slabs. If the same business was run by a partnership firm, then firm will be paying directly 30% tax on this profit with additional cess. Again I confirm, if the business or profession belongs to individual person, proprietorship, on that income, the proprietor will be paying taxes, just like he will add income from salary, income from house property, just like that he will also add income from business and income from other sources. Then they will file ITR form number 4. By adding all incomes into one, they will be filing income tax return. Individual person will not be paying taxes directly to the government on the business name. Individual person will consider income from business as a personal income while filing income tax return, just like income from salary, income from house property. Also need to add extra 10,40,000 as in the name of income from business profession. On that, again total deductions whatever is eligible, that will be reduced. On the net income slab basis you will be paying taxes. But when it comes to a firm needs to pay taxes directly 30% on firm name itself. That is a process. In the next video, we'll go to e-portal and we'll be doing these things practically. Once I will show you by using individual person's PAN card, and again I will show you by using a firm's PAN card. Okay. See you in the next video. Thank you.